doesn't make any sense to pay for anything in Bitcoin for two reasons. The first reason is because it's a taxable event. Mm-hmm. And you're a fool to accelerate taxes on your own person by a decade. The second reason it doesn't make sense, I see an emerging economy with a digital asset called Bitcoin and a digital currency, likely the dollar, but if not the dollar, perhaps the renminbi, right? And if not the Chinese currency, then perhaps the euro. At the end of the day, the winner is going to be the strongest currency, which will come from the strongest country and the strongest economic network, which will be the US. And the winning asset will be the strongest crypto asset with the greatest security and the greatest acceptance and the most stability, and that will be Bitcoin.
So is it wrong then to be calling them cryptocurrencies?
Yes, it is wrong. Most sophisticated people that have studied it realize they're crypto assets. Bitcoin is a crypto asset. It's not a cryptocurrency. It's a tragic misnomer. And because people call it a cryptocurrency, then it lends itself to a shallow criticism that it's not good as a currency because the central banks will ban it and because the tax treatment is poor and because the transaction rate is low. But again, those are all red herrings. It's not a currency, nor does it need to be a currency, right? Anybody thinking about it for even a few seconds realizes that if there's a taxable event every time I transfer it to you, it can't be a currency. So right. So no, it's not a currency. It's an asset. And if you think of it as an asset, it's very helpful because then you realize it's not competing with the dollar and the euro. It's competing with gold and silver. It's competing with bearer instruments, and to a certain degree, it's competing with bonds as a store of value, and it's competing with ETFs like the S&P 500 index as a store of value. And once you understand it that way, then you're not so afraid anymore because you understand the regulatory framework that comes to Bitcoin is the same regulatory framework that comes to gold, silver, and S&P 500 indexes. It's just know your customer, anti-money laundering regulations. And if you're afraid to buy Bitcoin because you're afraid of regulation, you shouldn't be, because if it is regulated pari passu or at parity with these other assets, it will create an avalanche of institutional money flow into the asset class because it'll simply normalize the treatment in the Western world. The IRS in 2014 deemed it to be property.
Right.
And as property, it means that when you transfer it, you owe a capital gains tax. So there is like zero chance the IRS is going to reverse that. It is property. It's not a currency.
And if you don't report it, it's a felony. This is the problem I think I wanted to touch on a little bit, is that I think you see a lot of these crypto billionaires and millionaires on YouTube and other places where buying flashy cars and so forth. And if they're using their crypto in order to buy those things and they're not reporting it to the IRS, that's a huge mistake.
Yeah, it's not very wise to transfer Bitcoin to pay for anything. I mean, if you were to say to me, I can pay you in Bitcoin, it doesn't make a lot of sense because the transactions are slow. But if I had highly appreciated Bitcoin, I would be accelerating a shorter or long-term capital gains bill in order to pay you. And so the only way that I would pay you in Bitcoin would be I would take $100, I would buy Bitcoin, and then 1 minute later, I would transfer the Bitcoin to you so that the basis in the Bitcoin is equal at the time I acquired it and the time that I transferred it. So I think that this is a vestige from the first decade when there are a lot of retail users of Bitcoin and before they understood the law. But the law has been very clear in the U.S. since 2014. And any institution, right, any high net worth individual, any corporation, any institutional investor understands that you acquire this stuff, you're going to hold it. Now, I'll make one more point. It doesn't make any sense to pay for anything in Bitcoin for two reasons. The first reason is because it's a taxable event. Mm-hmm. and you're a fool to accelerate taxes on your own person by a decade. The second reason it doesn't make sense is because it's a long duration asset that's deflationary, which means it's likely to go up in value. It's been going up 150 to 200% a year every year for a decade. So why would you pay $1 million in Bitcoin to buy something which is going to depreciate in value when the $1 million in Bitcoin may very well double 1, 2, 3, 4, 5 more times, right? So it's a long-term investment asset. A much wiser course of action would be to borrow money against Bitcoin. If you have an appreciating asset, never sell it, finance it. And if the asset's appreciating at 20% a year, and if the interest rate is 5%, then it's pretty obvious what you ought to do is keep the asset, pay 5% interest, because the tax bill on money that's borrowed is zero. So you could live off of your borrowings against your appreciating asset for the rest of your life, without ever paying the asset back, without ever paying the loan back, and without ever paying any income tax, and without ever paying any capital gains tax in the U.S. Other tax regimes may be different, but in the U.S. right now, that would be the treatment.